Gold is looking kind of bearish right now, but who knows how it'll be affected by the U.S. election this week. Stick around and we'll talk about it. Hi, this is Tim from TradingStrategyGuides.com. Today we'll be looking at a descending triangle on spot gold. But first, I want to look at a couple of active trades. Later on, Tim's Trading Maxim. Happy Monday. Let's take a look at the actives. I mentioned Friday that I was holding the trailing stop on Bitcoin down here, and I'm kind of glad I did because it popped down and it would have taken us out on this one and this one, not this one, not that one. And now we've got the break up here. It's pushed the PSAR back down to the bottom, and I'm going ahead and following stops now. 12,976.29 is my current stop, locking in 21.35.56. Now understand I'm recording this on Saturday afternoon, and you know the crypto charts move all weekend, so this could be way different by the time this video is released on Monday. And the only other active trade we've got right now is crude, which triggered right here on Thursday. I got in at 36.17, stop of 38.68, first target of 34.50. It did push down about halfway to that on Friday. We'll see how this goes. Again, be careful of the U.S. election this week. It could rock the markets. That's all the active trades I've got for today. Let's take a look at today's trade pick. Today we're looking at a descending triangle on gold. Now I was looking at this little range right here, which came after we entered this trade. We got this breakout right here for a little bit of profit a few weeks ago, and then it was started making this range right here. But then I looked down here at the volume and the volatility, and they've been declining since way back here. So I started looking for a pattern that could match this decline, and I found this descending triangle. I decided that just looked a lot more promising. Now, I've already said this, but I want to stress it. The markets could go really wacky this week. I'm going to suggest you stay out of this trade until after the U.S. election has been decided and the market has had a day or so to rest. After that, see if the pattern is still intact. What I'm saying is wait until at least Wednesday's close before looking at this. After the election, there could be a knee-jerk reaction in the market that will look like a breakout with a volume spike, but could actually immediately reverse, and you could just get a huge stop out. For those of you outside of the states, the election is on Tuesday and probably won't be decided until the wee hours of Wednesday, which means the reaction is likely to happen during Wednesday's market hours. If you can stand it, it probably wouldn't hurt to stand aside all week because it's altogether possible that this election won't be decided this week at all. Just to make sure we're all on the same page here, a descending triangle consists of a strong support level like this one here at 1860 with several historical touches or approaches of the line and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at buy orders until it finally breaks through. It should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal from it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to sell a daily candle close below the triangle or below 1860. On the breaking candle, to enter a full-size position, we want to see this volume bar reach this volume average right here. If it doesn't quite reach the average but does reach at least 75% of the average, I'll take a half-size position to reduce my risk. So look up here at this volume number, divide it by this volume average. You should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So when this thing finally breaks, just ahead of the close, say 15 minutes or 30 minutes, set up your sell order. Look down here at your ATR, multiply that by 1.5. Measure that distance above the entry. That'll be your stop loss. Measure 1 ATR below your entry, and that will be your first target. If after entering the trade we get a candle that closes back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit the target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit, set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using 2 positions. The first position has a stop loss and a take profit and will close automatically when the first target is hit. Second position will only have a stop loss and will be allowed to run. When the first target is hit, move the stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on gold. Guys, this is how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and trade it that way. And I use trading maxims to keep myself in line. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 2, there will always be another trade. This is kind of one of my favorites, actually. Are you guys familiar with the term FOMO? FOMO, that stands for fear of missing out. I'm here to tell you that you should never chase a trade. In other words, don't enter a trade that's beyond ripe. Don't fret if you get up from your workstation to do necessary things, like pouring another cup of coffee, and end up missing a trade. Just know that there will always be another trade. Don't take a bad trade just to be in a trade. Wait until everything is exactly right according to your rules and jump in. Remember, there will always be another trade. Remember our gold trade plan for today. We're going to sell a daily candle close below the triangle or below 1860. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. You'll find a link in the description to the trade management video for more details. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. Oh, and I want to point out a new addition to the Dream Trades app. It now adds a numerical ranking out of 5 on the setup for each stock. That is just so cool. Come back Wednesday for the next installment of the Trading Education Series. This time we're going to talk about identifying future trends. And be here Friday for my Strategy of the Week and next Monday for my Trade Pick. Our videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you on Wednesday.